Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and we have the FOMC meeting in about 5 minutes, just over 5 minutes time. And I want to talk about what we are expecting, and I want to show you a live market reaction to it as well. And of course, I do still have my trade open as well, and I'm going to be talking about what I'm currently doing with that trade and what I'm going to be doing after that FOMC meeting happens as well, because we don't just have the FOMC meeting, we also have, if we come and have a look at this here, we have the Fed press conference as well, which is very, very important as well, because that is where Jerome Powell is most likely going to be talking about what they're going to be doing for the next, or what they're going to be releasing for the next FOMC meeting. Is it that, they're going to hint whether it's going to be a 50 basis point or not, or if they're going to continue to increase the interest rates harshly. So yeah, we're gonna be having a look at that. So please make sure you smash a like on this video. I would really appreciate it. Just smash a like on this video. It's free, really helps the channel out, and I do really appreciate it. So please smash that like button. But what I want to be talking about now is this tweet right here. So what this says is, on every single FOMC meeting rate hike so far this year, markets have dumped at 2 p.m. EST when the rate hike came out and rallied at 2:30 when Powell spoke. So what's happening at 6 o'clock UK time is that Jerome Powell is going to be talking about, is going to release the data, which we're expecting it to be 75 basis points. But then what happens at 6:30 is that he's going to be talking about the next, or sort of hinting, they're going to be asking questions about what they're doing next. So, the markets, they do tend to look into the future, and the price sort of depends on what is going to happen within the future. And what we can see here is July, after the data came out at 2 o'clock, we saw the markets dump. But then after that, at approximately 2:30, we saw the markets absolutely pump, because Jerome Powell was talking about the next FOMC meetings. Then we had June as well, exactly the same scenario. The markets dumped after Jerome Powell released the data, and then at 2:30, when he was getting asked all the questions, the market actually rallied towards the upside. The same thing happened in May. 2 o'clock, market dumped. 2:30, market pumped. Exactly the same thing in March as well, going all the way back to March. 2 o'clock, market dumps. And then 2:30, the market actually pumps towards the upside. So I am going to take this into consideration and actually take profits off of this short position that I have. So we do have the data coming out in around 2-3 minutes. So if we do get that 75 basis points, which we are most likely going to get, we are most likely going to see the market dump. We're going to see Bitcoin probably dump towards the downside. Now, this is a 1 minute. We're going to look at the 1 minute. See what happens to the markets. We're getting a bit of volatility coming in. As you can see, the volume is increasing. We're seeing that price push down and get bought back up. So we're having that volatility coming in. And yeah, I'm going to take profits on this trade, a little bit of profit, I do think, on this trade, because I do, I'm looking at what's happened previously, and every single time we have seen that market dump, and then at 2:30, we have seen the market actually pump. So I'm going to wait for that price to pull back. Once it's hit some potential take profit levels, if it hits some potential take profit levels, then I will take some profit off my short position. And yeah, see where it goes after 6:30 UK time, see whether the price does push towards the upside, because I do still think there is a possibility we could have another test of this resistance level up here that I actually shorted. So, we shorted this back here. We added to the short here as well. I think we could potentially have another test of this level, creating some sort of triple top, and then the price actually dumps. I still think we need to have that last capitulation event. So looking at this chart here, we're still seeing that volume decrease, and we've actually broken towards the upside, which is bullish, but that volume just isn't coming in, getting that big spike in volume. Volume is still decreasing. So for me, I still feel as though we need to have that last capitulation event, coming down maybe to 15, 14, maybe even 12,000 before we actually start seeing the price pump, and then we can start talking about that bull market. So first of all, I do just think we need to have that last capitulation event. I do still think that is going to occur. Looking at the DXY, we've been speaking about this, the mid-range of this parallel channel is obviously going to act as resistance, as it always does, support and resistance, support there, resistance there as well. As we can see, we are using it as resistance right now. But if we do get 75 basis points, I do reckon that we are going to see the price of the DXY push towards the upside, and potentially find some resistance up here where 230 comes, and we'll probably see that dump potentially. Obviously I can't predict the market perfectly, but this is sort of what I'm expecting to potentially happen. We can see right now a lot of volatility is coming in, and I think we have actually seen that data come out. Not yet. Let's see. It's pretty likely we're going to have that 75 basis point rate hike. Wow, a lot of volatility coming in now. Jesus. Yeah, so wow. Okay, a lot of volatility coming in now. It looks as though, let's go back to here. Have we had that 75 come in? This is not showing me anything here. Okay. Does it want to show me here? That's annoying. Okay, let's go back to the charts. It's definitely 75 basis points, and as we can see, we're getting a lot of volatility coming into the market. The price is pushing towards the upside. Yeah, yeah. The volatility is crazy. So we're seeing this actually push towards the upside. I am actually going to bring up where is it? The FOMC meeting. Just going to bring up the news here. So let's have a look at that. Where's it gone? Oh, I had it saved somewhere here. Okay, that's annoying. I cannot find that. But yeah, a lot of volatility coming in. Has it updated? There we go. Yeah, so 75 basis points has come in. We've had that come in there. It's finally shown on this screen here. So we've had that 75 basis point rate hike. What is the market going to do from here? As we can see, we're getting a lot of volatility, a lot of volume coming in. It looks as though the market is pushing towards the upside. As we can see here, it is pushing towards the upside. Now, I would expect the market to dump after getting a 75 basis points. But of course, if we're looking at that 50 basis points coming in for the next FOMC meeting, then there is a reason for the market to pump, because what the markets tend to do is they tend to look into the future. So, for example, Microsoft. So Microsoft, they've had their they've had their earnings come out. Their earnings are doing well, but their stock has actually been coming down. And the reason why their stock has been coming down is because they have publicly said that they don't expect the company to do as well next year as it's done this year. So what the markets tend to do is look into the future, and that's why a lot of shareholders are selling off their stocks. So that's just an example of why the market could be pumping if Jerome Powell is going to be talking about potentially slowing down those rate hikes, potentially putting out a 50 instead of a 75 next FOMC meeting. So right now, a lot of volatility. I would have expected the price to actually pulled back a little bit more. We did actually pull all the way back to this value area high, close to that value area high there, which would have been a take profit point, but that happened so quickly, it would have been almost impossible to get that. So yeah, this trade's still in a bit of a profit. It's not the best time to be trading within such a volatile period like this, but I entered this trade around the 26th of October, I think it was, and I've been expecting a pullback. Right now, it's just not happening. We're having a slight pullback, as you can see. It was in this morning. It was in 10% profit, over 10% in a profit. But yeah, this is not the best time to be trading. But again, I've had this trade open for a long time, and we got that 75 basis point rate hike. I'm expecting a pullback from this. Looking at these, we've had we've had 75 basis points before, and we have seen that market pull back. So we'll have to see what happens. And I do want to find this. I do want to find this stream for you as well, where we can actually see Jerome Powell talking as well, and see what he's going to be talking about for the next FOMC meeting. But right now, still a lot of volatility coming in, a lot of volume, as you can see right there. Let's see what happens. Let me see if I can find this thing for you. So before we get into that, yeah, please make sure you smash a like on this video. Crypto Invest said it perfectly. Holla, smash that like button. Yes, please make sure you smash a like on this video. I would really appreciate it. Really helps us out. But yeah, I was looking this morning at this sort of symmetrical triangle pattern type thing. We were, looking like we were going to break towards the downside, but obviously we've had this FOMC meeting data come out, 75 basis points, and we're getting that volatility. So if the fundamentals sort of outdo the technicals, such as big events like this. So the technicals, we can sort of scrap a little bit, but of course we still, for my trade, we're still looking at those TP points. If we come to those take profit points, value area high, this support level down here at the bottom of the parallel channel, I would be taking some slight profits just based off this tweet here. Looking at the previous ones, we tend to dump after the data comes in. But actually, you can see here, July, we actually pumped and then dumped. So maybe this is what is happening right now. We could potentially be seeing that price actually push towards the upside before we then see a pullback. But we will have to see. And then at 6:30 UK time, we could actually see that push towards the upside. So, it's just a matter of time. We just got to wait, just got to sit tight and wait. Let's see, what's the time now? Almost 10 past. Okay, so we still have, just a little bit over 20 minutes. I want to see, let's see if we can get Bloomberg up. And see what they're saying over there as well. But yeah, a lot of volatility coming in. Live now. Here we go. WTW offers a multi-dimensional approach. Let's wait for those adverts to finish. But yeah, so looking at this again, I'm not sure if you can see the screen. Yeah, you can see the screen here. So what I'll be looking at is, if we come up to this cluster of resistance right here again, then I do think that we could still see that price pull back. We have a lot of resistance coming in. We do have a lot of resistance coming in. And I've been looking at another pattern as well. We also, obviously we have this parallel channel, this ascending parallel channel. We could actually see the price stay within this parallel channel and actually come up to 21,500, use that as resistance, and then we could see the price come down. But I've actually been looking at another parallel channel, sort of a larger time frame parallel channel as well. So let's just have a look at that. So the price is continuing to push towards the upside, but getting rid of this parallel channel here and opening up this parallel channel, we can see if we come to the 8 hour, we can actually see that Bitcoin has been respecting this parallel channel very, very well. I've noticed this as well. So coming and looking at the resistance, perfect tests of the resistance, literally to the dollar each time, support, not to the dollar each time, but we tested this multiple times, pretty close to the dollar as well. So yeah, we're seeing this being respected very well as well, and this is lining up with a lot of resistance as well. So for me, seeing the price coming above this level here would be very bullish, but if we do see a rejection, it's looking very bearish. Yahoo Finance live for Powell speech. Yahoo Finance, yeah. Let's have a look at that as well. Bloomberg's loaded now. Back to April, even as people understand talking about the 10-year yield. Let me just bring that up on the screen for you. Are you changing your estimation of where the Fed will have to go at that base rate? How high they'll have to bring it, given the lack of sensitivity right now in the underlying economy?
And look, I think the Fed has gone further than I would have expected already. I would have thought that the price pressures would have faded faster. So, I think we have to be open to the idea that the Fed may end up significantly higher than what I'll call an expectation of something in the 5 to 5.5% range in the first half of next year. And but having said that, I am concerned that that kind of repricing will be destabilizing to financial markets, and that we could get ourselves into a situation where we have a financial accident like we did with long-term capital or Orange County, which could cause the Fed to have to abort, even though it wants to continue raising rates.
If you're just tuning in, this is a special edition of Bloomberg Surveillance. The Fed decides. The decision behind us, the news conference still in front of us, about 21 minutes away. 75 basis point hike from the Federal Reserve. And if you open up the statement in the third paragraph, from the line that reads the committee onwards, take a listen to this. The committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial development.
Have a look at the S&P as well, see what that's doing.
Rallying up 0.6% on the S&P 500, on the Nasdaq up about 0.5%. The bond market rallying too. Yields are lower by about 10 basis points at the front end to 4.45. On a 10-year, we're down about 5 basis points to 3.98, and the dollar
still not making it above this resistance level here on the S&P 500, which we want to get above this resistance level here to get bullish for the S&P 500. If we do get above this big resistance level here, then yes, I do think we could see that S&P push to over 4,000, come to 4,160. But right now, we're still not getting above that resistance level. If we do get a confirmed rejection from here, I would expect the price of the S&P to come back down to around 3,600. That's what I'll be looking at for the S&P. Obviously, that wouldn't be good for crypto either. DXY, we're actually seeing that DXY get a rejection from this mid-range here.
A number of months ago, in fact, in springtime, Tom, we were doubting whether they would deliver a 50 basis point hike. Right. We've just had 4 75 basis point hikes from this Federal Reserve. So they've got up to 375, Tom, from zero in March. That's a lot of tightening in about 8 months, Tom. Then we're going to talk about some more. And to your point, they're the cumulative hikes we've seen already. There's some more in our future. And then there's the lag, the time that those hikes actually start to hit the economy and cause the pain we're all anticipating.
I want to clarify, John, I have no special knowledge that Vice Chairman Brainerd was part of cumulative tightening. I was just gaming there and speculating at length.
I think you're right to speculate. It almost echoes what she said in a speech a number of weeks ago.
Diane Swank with us now, who really understands the dynamics of the x-axis for a Fed.
I am considering, taking profit on this short position that I have here. It's not in as much profit as it was this morning, but if we're not going to get this dump, then I am considering taking some profit off of this, because again, coming back to this tweet here, we do tend to see a dump and then a pump at the press conference, where Jerome Powell does answer those questions. And as we can see right now, we're not just getting that dump yet. As you can see, we do get that pump, and then it tends to be a dump. So maybe that's what we're seeing. So I am going to wait and see whether we do get this dump. Again, here in May, we've had that come out. We had a slight pump towards the upside, and then we saw the price pull back. So this is, what I would be looking at. This was March. We saw the market just pull back straight away. But it is not, clearly looking here, July, we saw the markets push and then pull back. Again, June, markets push and then pull back. Markets push and then pull back in May as well. So, still going to wait and see whether we can see the market pull back. But if we are going to see the market just continue to push towards the upside, and then Jerome Powell, has that press conference and answers those questions, if he's going to be talking, quite dovish there, then we're most likely going to see that the market continue to push towards the upside, because the markets, as I said, the markets look into the future, and if they are going to be looking at a 50 basis point rate hike in the next FOMC meeting, December the 14th, then the likelihood of it is the market could actually push towards the upside coming up to that day. So we do have to be careful there, and I will be careful there, and I will, take profit if that's the case. Right now, I'm just waiting to see whether we can see that push towards the downside. We still have 15 minutes.
I think we're going to start to see it by the first to second quarter of next year start to come down. What really will be interesting is how rapidly housing prices ultimately fall. I do think we're going to have
the 2-year is still exceeding the 10-year yield as well. So it's also exceeding the 30-year as well. So it's still looking likely that a recession is in play. Coming and looking at this chart here, this is the 2 and the 10-year yield curve inversion. Every time we've seen the 2-year exceed the 10-year, we do get a recession. So as you can see, the orange line is the yield curve, and when it goes below this black line here, so it goes into the minuses, that's when the 2 exceeds the 10, and then these grey boxes here are a recession. And every time we've had the 2-year exceed the 10-year, we have had a recession as well. So this is something we need to factor in as well, because if we are going to get a recession, we are most likely going to see the markets have a lot more pain. We're going to see a lot more pain within the markets.
But is there real news here? And the reason I asked that, and Dan, maybe you can help me out, wasn't this just implied by the dot plot that came out at the last Fed meeting? There was going to be some kind of step down here from 75 to 50. And aren't we just at the mercy of the next 2 CPI prints regardless?
Exactly. And I think that's, sort of the idea that this is a step down, that this is a change. It's not. And that's why I said it's consistent with the SEP, the Summary of Economic Projections. This is what the Fed was expecting to do. They verbalized it more clearly. And I think that was important to prevent a descent. But it really is where the Fed was going. And it's not about the terminal rate. They're still looking at as high a terminal rate as they need to derail inflation. Whatever my views are, they're going to keep going until they really see a significant deceleration and they'll hold rates high for a longer period. And they're willing to take that pain. That's what the 8 minutes, 34 seconds in Jackson Hole was all about.
The 8 minutes and 34 seconds heard around the world. It's more than probably any of his other many, many, many minutes.
We do have a big week coming in as well. I think, is it the big week? Let's see what have we got coming on in the next 7 days. Let's get rid of all of this. Let's see what's happening in America, because America is the biggest mover of the market. So okay, so on the 4th of November, we've got the non-farm payrolls as well. That is most likely going to move the markets quite a lot as well. We've got unemployment rates as well. That is probably going to move the markets as well. So we've got them to look for as well. Seeing a bit of consolidation here, bit of uncertainty. I think what could potentially be happening here is, and what happened previously as well, is, so looking here, and we've had this push towards the upside, and then we had the dump. So March, we didn't get that, but May, we had that. We had the push towards the upside, then the dump. We had June push towards the upside, then the dump. And then July, we had the push towards the upside, then the dump. What I think we could be seeing is those early shorts actually becoming getting liquidated. So those early shorts getting liquidated, and then we see that price pull back. So what I mean by liquidated is the shorts, their stop losses or their liquidation gets hit. So maybe that's what we could be seeing right now, and that's what we probably saw. That's probably what we saw last time. Going back to this tweet again, when in June, in July, and in, when was it? May. Yeah, we probably saw the same scenario there. We probably saw those early shorts getting liquidated and hitting those stop losses, and then the market dumps after that. So we'll have to see. I do want to stay live for another 10 minutes and see what happens to the market as well. As always, I want to be transparent with what I'm doing, and I do have this short position still open. coming up to that entry point. It was in some nice profits this morning, but yeah, I do want to be transparent and let you know what I'm doing.
These days, like Tenneco, that I believe Apollo is doing. There seems to be no slowdown in M&A activity or financial transactions.
In fact, let me go to you on the partition of GDP. It's been a theme for us, and it's something that the Fed has to confront. GDP is being held up essentially by net exports as a generalization. How flat on its back is the American economy right now? I think I lost Diane. Diane, are you there?
Oh, sorry. Yeah.
Okay. How flat on
Thank
its
you.
back?
Neither sell or buy orders yet. Have you, Rob? Have you set some buy orders? Have you set some sell orders? And if it hits a buy orders, you're gonna wait for the price to go up, and then sell orders, short orders. If that's hit, then I feel like I know what you're doing.
But it really is pretty fascinating to see how much.
Mr. Panda, fair to say it was priced in. Yeah, we could be looking at. Let's go back to the charts. No, we could be saying that this was priced in a very long time ago, the 75 basis points. And, the market is getting ready for that 50 basis point, which, is most likely going to be bullish for the market. But we do just have to be aware that we do have that recession looming over our head as well, which is not going to be good for the market. So,
on the trade side, I think it's really important to look at we've got a strong dollar, we've got weakening growth abroad. Growth abroad is weakening more rapidly than it is here. The trade deficit's not going to provide the buffer that it did as we go into recession either. Now, this isn't going to be the same kind of recession we had in 2008, 2009, or the pandemic recession. We've got a lot of pent-up demand in services, but the good side of it is already contracting. And we're going to see more contraction in the good side. We saw factory orders fall quite dramatically in September and led by export orders. Those are really important things to think of when we're looking at the trade deficit helping us out. And I think that is with a strong dollar and the kind of global scenario we have and the ricochet effects. When the Fed raises rates, they ricochet around the world. And the risk is that they come back and shoot us in our own foot. And I think that's really important to understand right now. The Fed gets it, but they also do believe that in order to derail with all that slowdown, inflation has still been persistent. And that means they believe they've got to raise unemployment in order to really bring demand to meet what they see as a supply-constrained world.
And Diane, you know how politically sensitive that's becoming, increasingly so over the last couple of weeks. The White House press secretary, Karine Jean-Pierre, just said our view is that the Fed is an independent agency and we respect their independence.
So talking about over the next 7 days, of course, we've got that non-farm payrolls and the unemployment rate as well. If the unemployment rate comes in under forecasted, that obviously that is not what the Fed wants to see. So that's going to be a really important day as well.
And I'm amazed at how little that actually phases him. It is going to be hard. I mean, remember, Paul Volcker was dealing with, protests. People were sending him keys.
Still a lot of uncertainty coming in right now. If you're charting on the 1 hour, we could potentially talk about this being a potential bull pendant. But yeah, I wouldn't trade that at all, especially not on the 1 minute. But we are getting this consolidation, a bit of uncertainty right now. What I do think is happening, I could be wrong. I do think we're going to be seeing these early shorts getting liquidated, and we could have this little push towards the upside, which we're seeing. Maybe we see a little bit more of a push towards the upside before that pullback, and then. Yeah, but then in 7 minutes, we do have Jerome Powell speaking as well. And from what Crypt Invest said, Yahoo Finance live for Powell speaking. I'm not sure really where to look for Jerome Powell speaking. Normally it's Penn who's got it up. So I'm not sure if they do it on Bloomberg. But is that where they do it as well? Do they do it on Yahoo Finance? I'm guessing they stream it on there. We'll see. Yeah, we're selling starting at about 20,800. I'm buying beginning at 20,100 at below. Okay. DXY still looks like it's going to pull back to 105-ish area over the next few weeks. What do you think? That's a possibility. It is a possibility. If Jerome Powell is going to be talking about a 50 basis point rate hike next FOMC meeting, yes, I do think that is something that's very possible. So what you're looking at is the price sort of coming down to this next level of support around this level here, changing that to support right there. So yeah, this is what you're looking at, and this is what I would think would happen as well. So if we're going to get rejected from this resistance level here, which right now looks as though we're getting a rejection from this resistance level here, and we come back down to this cluster of support here, and we break this cluster of support, then yes, I think that next target is 105. And that is obviously going to be very, very bullish for the crypto market. We would most likely see Bitcoin break its resistance and push towards the upside. However, if we find the DXY holds support at this level here and then bounces and pushes towards the upside, that is obviously not going to be very good for us. But yeah, definitely, that is something that is very possible. If we're going to be looking at Jerome Powell sort of speaking quite dovish, then we could see the DXY over the course of the next few weeks push towards the downside, maybe to 105. If it breaks its major support, 105 would be sort of that next target. Around 105.5. That's where I'll be looking at the DXY coming to. But yeah, if we break the resistance here and then we push towards the upside, then my next target is 113. So yes, Devin, definitely, yeah. If we do break this support here, then definitely 105 would be that next target. But we would have to break this support level here.
I would ask him that look, this was a great artful piece of language. I salute them for it. But at the end of the day, where
what is that going to be a stock market rally? The Fed officials have been on record saying that's not what they want to see in this instance. So I have to agree with our prior guest. It's going to be a very difficult tight wire act for Jay Powell to navigate here as he takes questions and isn't too bullish or optimistic.
Yeah, so
I guess we're going to have to apply the Goldilocks test with 2020.
This is what a lot of people are talking about as well, and this is what he's just been talking about. I've been listening to it slightly. I should have had it on the screen, but he's talking about how Jerome Powell is not going to want the stock market to push towards the upside. He does not want that to happen. So I don't think he's going to speak very dovishly. He's going to be speaking very neutrally. So yeah. Wall Street Journal, is that where it's live? As I said, it's normally Ben who's got it live. So Wall Street Journal.
Also acknowledging the fact they've done a lot of tightening to date. It's time for things to slow, but they haven't given up on that inflation target. So as some of the prior guests mentioned, I think it's going to be difficult to make sure that the market maybe doesn't run away with that somewhat more dovish message than the Fed has been signaling over the past few months, but balancing it with the fact that, yes, there's been a lot of tightening to date, but there's still a lot of work to do when it comes to inflation.
And Joanne, perhaps Lloyd Blankfein, the former chairman of Goldman, tweeted it best. I imagine Jay Powell and the rest of Fed governors are right now sitting with the thesaurus, trying to find the right word that means pause or not pause, depending on who's listening. So what's the language you'll be listening for? What's the Fed drinking game, coffee, if you will? Is it data dependent?
Yeah, who knows what thesaurus they're using, but data dependent is a term I'm sure we will hear again. I think they will get into specifics to try to create that balance. One area is to be clear that house prices went up a lot, rentals is up a lot. That's going to feed into keeping inflation on.
Size, sure. We were making jokes earlier that this is going to be a snooze fest, or we were just going to go through it waiting for December. All of a sudden, I'm not waiting for December. I'm waiting for 10 minutes from now when the questions come in to Chairman Powell. It's going to be interesting.
When you get the earnings and people start to trade and someone says, have you listened to
For some reason, Wall Street Journal's not loading.
Hasn't started yet. this is a two-part act.
Yeah.
And there's a news conference that starts in 2 minutes, and it's going to be about the emphasis in that news conference. And can I
Still
also
seeing
say
that
about
price
10
push
minutes
towards the
time,
upside.
12
So we'll see how that
minutes,
reacts
the
when
president's scheduled to speak as well. So you're going to have this really odd dynamic where
he's
the
getting those
Fed chair
questions.
is talking potentially about the pain still to come in this economy, and the president, at least the counter programming.
There's a lot of people watching this live stream, I'm guessing, so that's why Wall Street Journal's not loading.
Well, good luck. Honestly, I think that that's really the question is how can he possibly counter program given that inflation is the primary concern for so many people, and that does seem to be the Fed's primary concern. How much was that additional comment thrown in there? Basically a nod to the moment of politics that we're in. How much they basically saying, look, they're taking this into effect.
Oh, here we go. I've got it up now.
We got it. We're doing our best. Got to get inflation under control. Thanks.
It's not the first time that the Fed chair's talked about any of these issues. I just don't think any of this is really that new at all.
Do you think this is a snoozer?
I think Neil Dutter of Renaissance Macro nailed it a week or so ago when he said all of this is implied in the dots. What happens in the next hour is one thing. What happens on November 10th, December 13th, and CPI is completely another. That's going to set the stage for what 23
John,
and the trajectory and the glide path into 2023 is going to look.
We don't have time to banter, John. I'll be very quick here.
Always got time for
Mr.
banter.
Mr. Dutta
Thank
right
you.
now saying on the statement today, quote, Brainerd's thumbprints. That's what Neil Dutta wrote.
I agree with you. Most people do.
It's
an echo of the speech.
John Williams maybe weighed in here, other monetary heavyweights.
Waiting for the big man. Oh, here comes the big man. Here he
I'm
comes.
sorry, I was
All right, let's
really
mute this for a
taken by
sec.
the force of this frick.
And of course, there's going to be so many people watching it. Here we go.
My colleagues and I are strongly committed to bringing inflation. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American businesses. Restore price stability on behalf of American businesses. Priority of the Federal Reserve and serves as the bedrock of our economy. Economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The FOMC raised our policy interest rate by 75 basis points, and we can believe that will be set inflation.
Yes, and there's so many people watching this stream that
will be set
it's going to be lagging.
in process of significantly reducing the size of our balance sheet. Restoring price stability in process of significantly reducing the size of our balance sheet. Restoring price stability while maintaining a restrictive stance of policy for some time, fully reviewing economic development. More to say about today's monetary policy actions after briefly reviewing economic development. It has slowed significantly. Pace rose.
Oh dear.
A pace of 2.6%
Come
last
on.
quarter, but is unchanged so far this year. Indicators point to modest this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. It can significantly business fixed investment. Business fixed investment. Extremely tight. Year low. Job vacancy, job gain rising by an average of 289,000 jobs per month. Job gain rising by an average of 289,000 jobs per month. Job gain rising by an average of 289,000 jobs per month over August and September. Although agencies have moved below their highs, the job gains has slowed from earlier in the year. The labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. With demand substantially exceeding the supply of available workers. Remains well above our longer run goal of 2%. PCE prices rose, citing the volatile food and energy categories. Core PCE price 0.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy, guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes able to meet the higher costs of essentials like food, housing, and transport. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points, in the process of significantly reducing the size of our balance sheet, which basis points, in the process of significantly reducing the size of our balance sheet, which anticipate that ongoing
really
is
annoying.
sufficiently restrictive to return inflation 2% over time. That is sufficiently
Technology never just
to
works,
return
does it?
inflation 2% over time. That is sufficiently restrictive to return inflation 2% over time. These have tightened significantly in response to our policy actions, and we are seeing the effect of demand in the monetary restraint to be realized, especially on inflation. Why we say in our of monetary restraint to be realized, especially on inflation. Why we say in our study, determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down.
Now he's talking about slowing it. So looking at my
There is
trade, I'm
significant uncertainty
considering
around
taking
that
profit here.
of interest rates. Even so, we still have some ways to go.
Just because it's
And
not the
into
best
our
time
last
to be
meeting.
trading.
Rates. Even so, we still
See
have
what
some
happens
ways to
here.
go. And since our last meeting,
So last meeting of
suggests
the year.
that the ultimate level of interest rates will be higher than will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our meeting by being as clearly as possible.
Let's just
Forceful
take profit here.
steps to moderate demand so that
There we go. Not the best time to be trading.
forceful
So
steps to moderate demand so that it will supply. Our overarching focus is using our tools to bring inflation to that goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained of below-trend growth, set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly at your early. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, to Fed with our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between and let's say the December with the Financial Times? On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between and let's say the December with independent of that data given the lagged effects?
I'm not sure why this stream isn't working. Okay, there's too many people watching the stream, so there we go. Right, so if he's going to be talking about slowing down the interest rates, if he's going to be talking about getting putting out 50s instead of 75 basis point rate hikes, we could potentially see that market push towards the upside. Now, fundamentally, Ben is going to go through that with you tomorrow, but looking at the technicals, we are still we've still got a lot of resistance above our head. We've still got a lot of resistance coming in at between 20,977 and $21,200. There's still a lot and a lot of resistance there. So for me to get bullish, looking just solely based on the technicals, we need to break above this major resistance level here. If we can do that, then yes, we can see the price use that as support and then continue towards the upside, potentially coming to the next major resistance level. So if we bring up, there we go, 22,400. So the next level that we're looking at is around 22,400, 22,300. You know, we've got the cluster of resistance coming in here. So if we can break above this resistance level here, then the next level I'd be looking at is this $22,300 level. That's where I would be looking. But if we cannot break above this resistance level here and we continue to get rejected here, we could be looking at some sort of triple top here. And then I was also looking at this sort of Wyckoff situation as well, distribution, systematic Wyckoff event and phases. So what we have the BC here, so we have this first high here. That's what we've got right there. Then we tend to have a higher high. So we have a higher high right here. Looking at this here, we have the UT in phase B, as we can see right there, another higher high. And then what we tend to see is sort of another high here, but sort of lower than these two previous highs. Maybe this is something that we're looking at, but we can still see that price come up a little bit more and still be lower than these two previous highs here. So maybe we come and just kiss that resistance level and then we see the price pull back. I'm still going to be looking for that short. I have just closed that short position because, you know, right now I feel like it's just too volatile to be trading that. If you know, I enter the trade higher, then potentially I'd most likely keep that short position open, but it's pretty close to my entry point. So right now I am going to just, well, I have closed that short position. But yeah, if we break above this resistance level here, we could move higher. And if Jerome Powell is talking about slowing down those interest rates, you know, sort of pivoting, having a 50 basis points instead of 75 in December, then we could see the market starting to pump. Let's have a look what's going on here. So December, it's looking pretty light. Well, it's looking likely 61.1% that we're going to get 50. So yeah, we could actually see the market push towards the upside. But again, we just need to get above these resistance levels. I'm not going to become bullish unless we get above this cluster of resistance here. If we get above that cluster of resistance, yes, I can get bullish in the shorter to midterm. Yes, we can come higher next to that next resistance level. But for me, if we stay underneath this resistance level, if we are going to get that rejection, then I do think that we are going to see the price pull back. So what I'll be looking for next is potentially entering that short position a little bit higher. I'm still going to be looking at entering that short position. So maybe I'll look at entering that short position at maybe 21,000, 21,200 maybe, and then going from there, seeing whether the price pulls back. And then the invalidation for that would be a candle break above that. So that is what I'm going to be looking at next. If we do get a candle break above that, I'd be looking for enter a long position, only very lightly, waiting for the retest. If we get the retest and the bounce, then I would enter more into that long position, increase the capital into that long position and ride that up to potentially $22,600 approximately, with that first take profit being $22,300. That's what I'll be looking for the bullish case. But yeah, still feeling bearish because we are below that major resistance. Just solely basing it off the technicals, we are still looking bearish. So yeah, for me, I was in that short position. The entry for that short position was at $20,830 approximately. For me, we're a little bit we got a little bit too close to that entry point. And with this being such a volatile time, for me, the best thing to do was close that position. And then if we come back up into that shorting area, then open another short position there when we're not in such a volatile period. But right now, we're in a very volatile period. And I mean, if we didn't come as close to my entry point, then maybe I would have kept that short position open. But for me, just coming a little bit close to that entry point, I don't want to turn this winning trade into a losing trade. So you have to take a step back sometimes and just take your profits and take it from there. and look to see whether you can re-enter that position at potentially a better price. So for me, I'd be looking at re-entering around 21,000, 21,200 as that second potential entry point. But yeah, taking a little bit of profit there. I think it was around just under $200 in a profit, so that's nice. Of course, we got paid as well for having that short position open, a little over $10 for that as well. So it's always nice to get paid for having those short positions open. But yeah, right now it's a very, very volatile time. We're seeing a lot of volatility coming in. Looking at this here as well, the 1 minute, yeah, still a lot of volatility coming in, still a lot of volume coming in on that 1 minute chart. So yeah, very close, as you can see, very close to that entry point. So for me, the best thing to do was just close that short position. If we do come back up to this level here, as I said, I will be shorting it again and seeing if we do get that rejection when we're in a less volatile period. Volatility was 3.25% range. I'm sick of BTC. I think I'll order some good weed instead to get me through the winter. Lol. sounds like a good plan. Yeah. You know, Bitcoin's very boring at the moment, but if you're still here, if you're still in the market, then you know what? You're going to be the winners in the bull market. I can tell you that now. If you're still here in the bear market, in the worst time of the bear market, like right now, where there's so much uncertainty, for me right now is a worse off time than the actual bottom of the bear market. You know, if we have that last capitulation event, I'd be happier then than I am now, because right now and over the past, few weeks, the past 2 months, we've been in such uncertainty. It's just a really horrible time in the market. And for me, I'd rather actually see the price dump than being in such an uncertain period like it is right now. So if you're still here, then, congratulations. You are going to do very, very well within the bull market if you are still here, because if we do, well, I'm sure you are dollar cost averaging right now, but if we do have that last capitulation event, I'm sure if you're still in the market now, you're going to be dollar cost averaging within that last capitulation event, because a lot of people will have exited the market right now and walked away from crypto, because, looking at this 4 hour, we've been trading sideways for a very, very long time. Since the 13th of June, we've basically just been trading sideways. Nothing too exciting. And for me, this is a more scary period of the market than actually the price dumping, because there is so much uncertainty. Is there going to be another dump, or are we going to be pumping? That's what everyone is questioning right now. Are we going to have another dump, or are we going to finally push towards the upside? So right now, for me, is more of a scary time than the actual time that Bitcoin does dump. Because when Bitcoin does dump, we know the support levels, but right now we don't know what's going to happen. When it dumps, we know we're going to dump, and we know we're going to find support at one of the support levels. But right now, we don't know whether the price is going to pump or whether the price is going to dump. So, for me right now is just trading that range. That's the best way to trade this market right now. Just trading that range. That's what I've been trying to do. That's what I've been doing, and we made some nice profits back here. We made some nice profits back here as well. But yeah, I've been trying to enter a short position. We entered a short position around $20,300. Unfortunately, that got invalidated, but we've come up to the next resistance level. I've shorted that. That played out nicely. We were in over 10% profit. We're in, here, if we were counting it from here, we were definitely over 15% in a profit, close to probably 20% in a profit. But it's such a volatile period that for me, it's not the best time to be trading. But because I was already in that trade that I entered back on the 26th of October, I wanted to hopefully keep that short position open. And I was just looking at this, the previous times, where we've seen the price actually dump, and then coming into the press conference, we've actually pumped after that. So I was, saying at the start, I was going to take profit at just before the conference, but that's what I did. But we didn't see the price dump. We had a slight push towards the downside. We came to $20,140 approximately, just testing the top of that value area high there, that we used as a support previously there and there. So we were getting a bounce off of that level. Obviously, there were a lot of buy orders down there as well. So yeah, but yeah, what I'm still looking at is potentially the early short. So even me, you know, I know I've opened this short back here on the 26th of August, but was it no 26th of August, 26th of October, 26th of October. But you know, we can still count that as an early short. Potentially, I was still in that early short, so I'm sort of contributing to this price actually pushing up because I've closed that short position. But as I said, you know, I didn't get liquidated. I did exit that position in a profit. But potentially, we're looking at these early shorts getting stopped out, getting liquidated, and then we could see the price coming up to these resistance levels again here, maybe creating a higher high, getting some sort of swing failure pattern, grabbing the liquidity from back here, getting a swing failure pattern above that, and then we could see the price actually dump from there. But yeah, when the market actually finally realizes that we've had that 75 basis point rate hike. So yeah, interest rates going up, that's obviously not good. You know, a lot of people are going to be, once a realization sets, I think there's a possibility that we could see the market actually pull back because, you know, with the interest rates increasing, you know, everything's going to continue to get more expensive. Inflation's still getting away from the Fed. I know the previous inflation has come lower than expected, but it's still actually getting away from the Fed. Recession looming over our heads as well, with the 2-year exceeding that 10-year as well. There's just a lot of still bearish fundamental news out there, and not even just that's, it's staring us in the face. And you know, like the recession, it's looming over our heads. So for me, we're still looking very bearish. So I think there is potentially we could have that last push up to here and then come down. That's a scenario I'm looking at. But for the second scenario, if we do break this resistance level here, come higher, use it as support, then we could bounce towards the upside. Then we could see a push towards the upside. So, you know, that's what I'm looking at. But yeah, still a lot of volatility. Ben is going to go live in the morning. So stay tuned for that. DXY is actually pushing towards the upside. So we could potentially see the market actually dump here. Let's see what happens here, because we're seeing that this DXY push towards the upside. When did you start trading? I started trading 3 years ago. I was started in the traditional market, and then, you know, swiftly after, I think it was 3 weeks after crypto, I got into crypto because, you know, you can make a lot more money within the crypto market rather than the traditional market, but you can also lose a lot of money as well, a lot more money. So, you know, I've been through both phases of that. So yeah, I've been trading for about 3 years, I would say now. 3 years, maybe just under 3 years. So yeah, looking at this here, DXY pushing towards the upside. This is not going to be good for Bitcoin. Maybe I shouldn't have closed that short position. Maybe I shouldn't, but yeah, right now it's just a bit uncertain. Right now. Getting pushed right into the apex of this symmetrical triangle right here. I don't like to trade solely off patterns. I like to look for confluence. For me, over the 3 years, roughly 3 years I've been trading, the best strategy that I have found is actually finding confluence. I know a lot of people just trade patterns out there, breaks of patterns. You know, you can be profitable that way. But for me, what's worked is shorting resistance confluence and longing support confluence as well. Right now, we're actually seeing that price potentially pulling back. Is that DXY flipping into the green? I will stay live for a little bit longer and see whether we can get this push towards the upside on the DXY and potentially see that pullback on Bitcoin. But yeah, the scenario that I'm still looking at is maybe coming back to this resistance level here and then seeing a pullback. You know, I still feel the liquidity needs to be grabbed from up here, and then we can get that pullback. But it looks like the price wants to pull back now if we're going to get that DXY push towards the upside. Let's have a look at Ethereum as well. Ethereum, nothing. We're going to push towards the upside, but Ethereum for me is looking very bearish. You know, we've broken this ascending parallel channel here. You know, we could class this as a retest, and now we're getting a rejection. But we have this golden pocket here. It's acted as major support here, major support, actually major resistance here as well. So this golden pocket is something that we need to break towards the downside before considering entering into any short position. I would enter potentially a light short position here, retest, enter another short position, rejection of that. I'd be adding to that short position. So the rejection like that, potentially riding that down to this level here around 1,330, where we have this golden pocket. We have the POC and the value area high coming in confluence there. But right now, we're still holding that support. I would like to see that break towards the downside. DXY. It's a very, very volatile period right now. Not the best time to be trading. You could be trading this. I could still be in that short position. But as I said, we could still see that price push towards the upside with Jerome Powell. He said that he was going to be looking to slow down those rates, potentially having that 50 the next FOMC meeting. And then that's why I do think we could have that push towards the upside. But then initially, I do think we are going to have that pullback once the realization sets that we have had a 75 basis point rate hike. So yeah, right now, let's see DXY again. DXY is trying to flip green. DXY is trying to get above this resistance here. A lot of volume coming in. Please make sure you smash a like on this video. Yeah, been live for just over an hour now. Please make sure you smash a like. And let me know where you're from as well. I'm in the UK currently. It's what time is it? It's almost 7 o'clock, 47. Smash that like button. Let me know where you're from. Let me know in the comments where you're from as well. But right now, if you are just coming into the live stream, what I'm expecting is potential last push towards the upside, potentially above 21,000, and then we get a dump. I think that's a possibility. So I might actually put some limit orders in here live on screen as well. Let's get rid of that. So I actually have a buy order, a short order in at 21,180. Still, that hasn't been hit. So let's plan this out. So I'm going to enter a short. I'm going to put some limit orders in. Newcastle. I have a few friends that go to university in Newcastle, UK. I'm still needing to make a trip up there to go and see them. It's been about a year now, and I haven't actually been up there to see their accommodation and stuff where they're living. It's a long way from me, a very long way from me. Cleveland, Ohio. I'm guessing that's Ohio. I'm not too sure about the where everywhere is in America. Cleveland, I think that's in Ohio, and I'm guessing OH is Ohio in the USA. But yeah, myself, I'm from down south in the UK. Yeah, Ohio. I thought so. UK, East Sussex. That's fairly close to me. Right, so let's plan this out. So I'm looking at entering another short position. I'm looking at entering because my vision now is that we're going to have another push towards the upside, potentially above 21,000. Then we're going to have a dump. I do think that is a possibility. I think we could grab the liquidity from here, get that swing failure pattern above here, and then we see the price pull back. I think what we could see is a lot of early shorts getting liquidated, their stops getting stopped out, and then we could see that price pull back. But initially, I'm going to continue to short this resistance within a bear market until the resistance is broken. If the resistance is broken, then we can start looking at long end. But for me, this is still a shorting opportunity here. So let's do that. Let's look at entering these shorts. So let's plan this out. So first entry, I'm going to put 20,000. Is this Bybit USD perpetual? Yeah, there we go. So first buy order, short order. Going to put 20,978 approximately. So Let's put that in. So that's going to be 20,978. Let's go for 25%. I think we did 25% there, roughly. Yeah. So make sure that's all good. 5x. I only traded with 5x in the bear market. It's isolated as well. Sell short. Always double check before you enter a position or put a limit order in. I've done it once before where I've had 20x. It was a 20x and it was cross margin as well. And that was a very dangerous thing. So you got to always double check. So there's the first one. I'm probably going to keep that one at 21,180. Yeah, I'll probably keep that there. And then I'll put 21,000. That's going to be my next short order. Let's do 21,000. What is it? 21,080. Let's do that. 25% again. So I'm going to leave that there. Put that order in as well. Then I'm going to put some a little bit higher. So because we could still get that swing failure pattern above here, grab the liquidity from so what I mean by swing failure and grabbing the liquidity is, we've had this high here. And what we tend to see is we say the price coming above this previous high here. So above $21,021. What happens there is people that are short are going to have their short stop losses above this previous high here. That's what we tend to see. So what we tend to see is when all those short, I don't know what I'm talking about here. I've completely gone off topic in my head. So yeah, so let me start again. So what we tend to see is when we get the price, when we get those people who are longing and shorting, you know what? My brain has just gone completely blank right now. I don't know what's going on with me. My brain has gone completely blank. But yeah, right. So swing failure pattern. What happens is we see the price come above here, this previous high here, because what we tend to see is a lot of people who have had their positions in, they get stopped out here. The liquidations are their stop losses. Sorry, their stop losses are put in just before this previous high here. And what happens is their stop losses get triggered. Once their stop losses get triggered, we then see the price actually pull back, and then we see that price reverse. So we've had it perfectly play out here. So we've had the liquidity taken from here. We've had that swing failure pattern, and we've seen that price pull back. So that's what I'll be looking at for this next scenario here. So I'd be expecting a swing failure pattern above this level here. So a lot of people are going to have their stop losses for their short positions above this high here. So around 21,000, just above 21,100. A lot of people that are entering their shorts are going to have their stops above that. So people who have entered their short positions because the Fed have increased, have released a 75 basis point rate hike, people are going to have their stops above this previous high here. What we would most likely see is those stops getting stopped out as the price comes up, and then we're going to see a swing failure pattern, and then the price comes down. So what I would potentially be looking to see is the price come up here, and then I would expect to see a wick above the resistance here. I would expect to see a wick maybe up to 21,500. So my next, so I'm going to probably put a short order in at 21,500, and then what we tend to see is we could see all of those short stop losses being hit or the liquidations being hit, and then we see the price absolutely tank. That's what I would be expecting here. And with that cluster of resistance coming in as well, it's looking pretty likely that could happen. So that's the thesis that I have, and that's why I'm looking to enter these short positions at these levels here. If we have that last push towards the upside, and looking at this here as well, we could potentially see this sort of wike off event. So maybe we don't actually take the liquidity from the previous highs, but yeah, we could initially be doing that. So those are sort of the two scenarios I'm looking at. Maybe this is that push towards the upside that we were looking at here on this Y-cost scenario. So the LPSY here, phase C. And then we tend to just see the price come down from there. or we either have the price come up here, grab the liquidity from back here, and then we see that price pull back. So those are the two scenarios that I'm looking at. For me, the more likely scenarios that we come up and then we come down. So that is what I think we could see, especially with this DXY having a lot of resistance coming in here. But yeah, as I said, if this DXY pushes, we could see Bitcoin continue to dump towards the downside. But yeah, I'm going to continue putting in those short limit orders. So the next short limit order that I'm going to have is probably, let's say, how many more can we put in? Maybe we could put 3 more in, maybe 21,300, 21,400, then the last one at 21,500. So let's do that. 21,300. Let's put that short in as well. 21,400. I like to just stagnate my orders. Get that the best price as possible. Just because I could, put it in. I would expect the price potentially come close to 21,500 if we do get that swing failure pattern, but insufficient funds. Let's see how much I've got left there. So let's actually move. I'm only trading with a very small amount of my portfolio. I don't want to be trading with any more than 5% of my portfolio, just because the market is so uncertain right now. So what should we do? Let's cancel this one here. Let's cancel that one at 21,400. Let's put half of it in at 21,400. Then just in case that price comes up to 21,500, let's put the rest of that in there. So there we go. As I said, this is only 5% of my portfolio, so I'm not too worried if I do lose all of this, but I will never, ever lose all of this because I will have my stop loss in place and I will have my invalidation in place as well. Most of the time, the way I trade, Rob says DXY is going up now. Yeah, still not in the green. Let's go on the short. I'm guessing you're looking at the short time frame. Yeah, DXY is pushing towards the upside. I tend to look at the DXY on the daily. But yeah, I would like that to flip green and see that push towards the upside for Bitcoin to have that pullback. But right now, I'd rather it pull back a little bit so we can enter in that short position again because I did exit that short position. My friend Crypto Archie is streaming with nobody watching. If he, wants to do a collab, then we want to look at collabs. Let us know in the comments if there's anyone you would like to do as a collab, would like us to do a collab with. We would love to get people on the channel. We would love to do collabs. I did a collab with Sin City Crypto. I went on there, shared my TA with them. Make sure you check them out as well. Sin City Crypto. They're a really good channel as well. Focus more on the fundamental stuff, but very, very good at that. Crypto Archie, put his YouTube name in the description. I'll look him up and maybe we could do a collab with him as well. But yeah, DXY still not getting above that resistance. Bitcoin looks like it could push towards the upside. We're literally coming into the apex of this symmetrical triangle. It's getting late. My brain's going dead. So I'm forgetting stuff. But yeah, we're coming right into the apex. Maybe the 3 hours, the better time frame to look at. Looks as though we could get a breakout. Still an hour and 50 minutes left until this potential breakout. So yeah, a lot can happen there, but a lot of volatility. You can see here that push towards the upside, then that dump. A lot of volatility. Yeah, still not a massive spike in volume on this daily chart. Still not a massive spike in volume. That's what we want to see. We want to see a big spike in volume here to get this confirmed break towards the upside, because if we're going to continue to decrease in volume, then we're most likely going to see that price roll over and come back down to this major support here, potentially breaking that, unless we can get major support coming in, a major volume coming in, sorry. As we can see here, volume is still decreasing. So from here, we've had a high spike in volume, lower spike, lower spike, lower spike here. We want to get a nice spike in volume like we've had back here. Just higher than this previous spike here, just higher than that. And then, you know, I'll be happy that we can start this bull run and we can start pushing towards the upside. But until we get this volume in, I just don't see the price pushing towards the upside yet, especially with the DXY being this high as well. So yeah, initially, we have what's going on here? What's this line doing? There we go. So initially, we have our buy orders in. I've set them, stagnated them. As you can see here, nicely stagnated. So we're going to get in at an average price. If it does come up and hit our target at around 21,500, we will be in this position at around $21,200, $300. I would average it out to be. Now, invalidation, as I said, would be a break above this cluster of resistance. A candle break above is what I'll be looking at. I'm going to have that stop loss at 10%. So I'm willing to lose on this trade 10% of my trading portfolio. But if we break above this, say we have the stop loss at 10%. Say the stop loss at 10% is $21,800, and we get a candle break above it, and the candle break above it comes in at $21,300. Then I would close partial. I would close a bit of that short position there. Then I would wait to see if we could use that as support. If we used it as support and we bounced, then I'll close the rest of that position. But as you can see, I'll close that position a lot lower than the actual 10%. Stop loss being, which would be up there. So yeah, I have those. I will be putting in those alerts in as well. Let's actually put. Can I put those alerts in here? Here I can. So let's put those alerts in. So if the price comes up to 21,180, let's add an alert there as well. 21,400, 21,400 as well. We'll have those alerts in. So I've got those alerts in. So if the price comes up there, I can get to my computer. I can be looking at what the charts are doing, what the trade is doing, because I will be in the trade by then. And then, you know, there's alerts give me an indication to watch the charts, because if we do get a candle break above and then we use it as support, then it's a signal to me to exit this position, because we could see the price come up to that next resistance level, which could be at $22,500. That's what I'll be looking at next. Wi-Fi cut out there for a minute. I've got there's a bit of a storm going on last night. It was a big storm where I am. I live quite close to the sea, so that's why there's a lot of wind. But yeah, there's another storm out there tonight. I can hear the trees rattling, so I'm sure there'll be a lot of branches down in the morning. But yeah, initially we've got those buy orders in. We're going to wait and see whether the price is going to come up and hit those short orders. If they do, we're going to be in that short, and I'm going to be looking at that price pull back. ETH up on the hourly. Let's have a look at ETH. Where's ETH here? Ethereum, yeah. Ethereum is Ethereum is the same as Bitcoin. You know, we're looking at it pushing towards the upside slightly, but still a lot of volatility. It's a massive spike in volume here. Yeah, DXY still not getting above that resistance level. That's what we want to see. That's what we want to see for that price to pull back. But for me, I think we want the price to come up here, hit our targets, then pull back. That's what I want to see the price coming. So I think I'm going to end the stream here. Please make sure you smash a like on this video. Really do appreciate it. Thank you for everyone who's stuck around. I know it's been a bit of a long stream, over an hour and 15 minutes. I've got those buy orders in. Of course, I'm going to be 100% transparent with you. If I get stopped out, if I close a trade, if I open a trade, as soon as these buy orders get hit, I will come live to you and let you know that these buy orders have been hit. But initially, I've set these buy orders. Just quickly again, because there's a big cluster of resistance here, I'm still shorting resistance within this bear market. That's still my plan until we break these resistance levels. I also think we can grab the liquidity from here and stop out those early shorts as well. So that's what I'm looking at for the price of Bitcoin coming up here and then dumping. That's my initial thesis. Second thesis is that we could dump from here. And then the third thesis is that we break above this level, use it as support, and then push towards the upside. So that's what I am looking at. Please make sure you smash a like on this video. Stay tuned for Ben. He will be coming live tomorrow morning. Stay tuned for that. He's going to update you with all the fundamentals of what happened with the FOMC meeting. And yeah, hopefully this trade can play out. Our previous trade that I did close on this trade, on this stream, we did exit in a profit, so still we've got this winning streak going. We've had one losing trade in the past 5 trades, 6 trades now, I think. So yeah, still pretty good. $200 in a profit, around 6% in a profit. So yeah, all good. So yeah, thank you very much for watching, and I will see you in the next stream. Please make sure you smash a like, and I will see you later. Thank you very much, guys.